All right, so today we are on the live call. We're going to be reviewing the trades that we took this week. I also plan on posting this on YouTube, so I am recording this as well. Either way, it's going to be posted into the community, the free community, so you can look back at it. If you missed this, you can look back at the trades that we reviewed. So overall this week, me personally, I made $1,000 in 2 days. I didn't take any other trades other than that this week, and if you took the same trades as me, you would have been up at least 1x your risk. So before we even review the trades, I'm going to show you the P&L on the account right here, if we can get this to load right here. So if I show you the P&L for the entire week right here, so if we click right here, from the start of the week, the 15th, till we could just say the 21st, which is today, we took only 2 trades, and you can see the total P&L is about $1,000 right here. And we're gonna be simply going over those same exact trades that I took. All these trades that I have taken was on the live call, and the live call is free if you do join the free community that I have right here. If you join it right here, everything is free. You can see my live trades, you can take the trades with me, and it comes with a free course that shows you the strategy that I personally use to make money long term. So we're gonna be going over that right now. So we're gonna be looking at my journal as well, as a reference. I do teach you how to make this journal in the community as well. So we go right here. Last week started on the 15th. Our first trade was on the 16th. So we're gonna even go over why we didn't take any trades on the 15th. So I'm gonna get this vertical line. And Monday started right here. Tuesday right here. Wednesday. Thursday. Friday. Now we can delete these extra lines right here. So like I said, to understand the concepts, you probably want to join the community and make sure you're going through that free course so you can understand the concepts that I am talking about. But for now, we can get started with this. So on Monday, the first thing we do is we mark up our previous day's lows, and our previous day's high is right here. That matches up with the previous week's high as well, so we don't technically need to draw that right there. And let's go to bar replay mode right here. We hop on the charts to around about 9:30 ish. That's when we start placing our trades, but we're gonna go to bar replay at around 8 o'clock right here. So the first thing that I noticed right here was price started to move bullish from London, but we didn't take any liquidity out from the downside, which made me not want to take any buys at all. This is 8 o'clock. Let me see what happened. 8 o'clock is right here. Yeah, 8 o'clock is right here. Then at 9 o'clock right here, price ended up pushing downwards like this. So my buys kind of shifted towards taking some sells, because we did, instead of looking at the London trend, I was looking at the previous day. How did it close? And it closed bearish. We took out liquidity right here at the Asian session highs, and we're also in this overall 1 hour gap, which is probably like some type of 4 hour gap as well. Yeah. And the only reason I believe I didn't get any trades on Monday was because we didn't get any retracement to take a trade, because most likely I would have been looking like around this area to take a trade lower, but I didn't get the retracement, and it ended up just hitting the target. And it is what it is. You're gonna end up missing trades. Let me see what exactly happened. Like if we go to, because I do post even when I don't take a trade. So 15, yeah, no trades taken. So the exact area, yeah, the exact area was right here. So it was moving down. I was looking to take a trade right here, but it didn't retrace. The session ended, and it already hit. No, I don't think the session ended, but it already hit like this previous month's high right here, which is a good area for it to retest to go higher. So I didn't want to keep my order here just in case it wanted to reverse. So that's a way that you can avoid taking losses, potential losses. But on to the next day, we didn't take any trades that day. We can just look at this, to be honest, for a reference. The next day we took a beautiful win. It was a 2K win, so that was on Tuesday. So what we have here is we have a previous day closed bearish right here. The Asian session high was swept. On top of that, it tapped into this 4-hour gap. So this is a 4-hour gap on the higher time frame. It was a 1-hour zone. So what basically happened is price pushed below this area, retraced up into this area, which I do teach how to catch those moves for our potential continuation down to target the Asian session lows right here. And it was also testing on the previous month's high right here as a rejection to potentially continue lower. This line I have drawn out right here was a daily I think it was a daily fair value gap or just a daily zone right here for it to potentially hit that area as well. And all we need is just a 1 to 2. That's all we aim for. 1 to 1 break even, 1 to 2 on potential target. So we took that trade, boom, hit our full target right here. And like if we see it in where it happened, this is that exact day, boom, hit the overall target, and it even went even more lower than that. So far, if you took the same trades up until Tuesday, you would have been up 2 times your risk, so up 2R. And then next was Wednesday right here. It was just a 1K loss. It was a fast loss. So it was the same type of play that was happening. So I didn't get the image as soon as I entered the trade. But what happened here was we was moving lower. We pushed below this area, and once it retraced, that's when I entered the trade. And what my confluences was we had the same previous days closed bearish right there. We have the previous day's lows liquidity. We had the Asian session lows liquidity. We was in the 4-hour fair value gap. We had big figure 48 to 100 areas. So those were my reasons to go short. But honestly, we could have potentially avoided this loss as well, because the only difference between yesterday and like on Tuesday and Wednesday was the London trend was closed in bullish into this area, right? But if you notice with Tuesday, it was with a wick. So a wick shows more signs of like rejection. Closures of bullish candles like this shows you more of like bullish momentum. So we could have just avoided the loss by either waiting a little bit more for a reaction, or simply just avoid taking any trades that day, because I didn't want to take buys because there was no liquidity that was taken out to the downside, but at the same time they were bullish closures to the upside, which it could have just been a no trade day. So this is how we also can learn from our trades as well. So on the 18th, which was the day after, we didn't take no trades. Same type of reasoning. I ended up like just learning from Wednesday, so I took that same trade on the same thought process into Thursday, which was basically we didn't have like price was moving bullish from London, but there was no liquidity on the downside taken out before moving higher. So essentially the best things to do was either take sell opportunities or no trades. But what I noticed was the same thing, was we had a lot of bullish closures showing that it's going towards the upside, even though this is a 4-hour fair value gap right here. So we just simply didn't place any trades. And I wrote the reasoning right here why we didn't take any trades on the live call. And on Friday, simply we didn't take trades on the live call simply because price did not retrace to our entry. It was a perfect like day for buys, because we was looking for buys, but we just didn't it didn't hit our entry. So what did we see right here? So we had the previous day's low swept right here. We had the Asian session low swept. London session started to move bullish. So by the time we hop on the charts, we could see it's clear bullish price action. If you pull a fib from the London low to where we was expecting the retracement to around right here, it lined up to around this area right here. So let me see if I can show y'all that in real time. What I mean by London fib means just simply pulling the fib from the London low to the current high. Okay, so this was the London low right here. If we pull the fib right here, you can see like that area that we was looking to take that trade lines up with the 50%, which is another confluence on why we just want to take the trades. So we simply just was waiting for an entry, but we didn't get the entry. Our session ended, so we just canceled the order. And we had more confluences with the previous day's high as a potential target of the for liquidity. And this area that we was looking to take a trade was actually a 4-hour zone. So if we mark out this area from that high and go to the 4-hour time frame right here, you can see that it's a 4-hour zone right here. So that's why we only took 2 trades this week. It's not about how many trades you take in a week. It's about being selective with your trades, because even though we took 2 trades, you're still up 1x your risk if you took the same trades as on me on a live call. And as you can see, I was up $1,000 for this week. And not only that, we're so far overall for the entire month, I'm up about $4,000 for the entire month. So if we go right here, show y'all that from right here to here, if y'all add this all up, even though you see some losses here, some break-even trades right here, you see the winners right here, and it all adds up to $4,000, and it's only the 21st. So all we got to do is just follow the same rules and processes tomorrow and see what the whole week is hitting for. So that concludes the end of the weekly trade review. Make sure y'all join up for the live calls, and yeah, let's get it.